that big numbers eluded us, but the market's just about flat.
Bulls are partying in style. They're ending the year on a high, and they've taken out peak 14,000.
For the year, it's been a cracker of a year for a bull.
It's been a flourishing finish for the Nifty. It did hit the 14,000 mark in intraday trade right in the morning itself. And that is how we are ending 2020, with the Nifty hitting 14,000 and then closing just below that mark. Phenomenal year for the Indian market.
Nifty hits 14,000 for the first time ever, then dips to end flat at 13,981. Sensex also hits intraday high and closes 5 points higher. Markets see choppy trade amid thin volume as global markets remain shut on New Year's Eve.
HDFC Bank underperforms Nifty in 2020 for the first time in 7 years, partly because of banking sector's underperformance and partly due to constraints placed on it by the Reserve Bank for technical outages.
Reliance Jio announces free voice calls to any network in India starting tomorrow. Interconnect usage charge regime comes to an end. Bharti shares fall.
Realty stocks shine in trade as Mumbai sees record registration of home sales of nearly 19,000 in December. Total house registrations for 2020 may touch 65,000, which is only marginally behind the 67,000 in 2019, says property consultant Knight Frank.
Jubilant Foodworks surges after the company announced it will invest 92 crore rupees in BBQ Nation Hospitality for 10.7% stake. Stock closes 4% higher.
Well, those were the top 5 headlines from Dalal Street on the last working day of the year and indeed of the decade. Welcome to Markets Today, the show where we will tell you all that happened in those 6 exciting hours of trading in just 5 headlines. Yes, it was exciting, although it was the last day of trade, simply because it was also F&O expiry day. I'm Lata Venkatesh, with me my colleague Mangalam Madan. Hi, Mangalam.
Hi, Lata. Classic expiry trade and classic day for the last day of this decade this year, like you said. And it was only poetic that the Nifty would have touched that 14,000 mark. But, you know, that's not all that we have on the show today. It is the last trading day of 2020. It's a packed show worth your time. Let's take you through what we've lined up for you. Gautam Shah of Goldilocks Premium Research and Marcellus Investment Manager Saurabh Mukherjee will crystal ball gaze and give us their opinion on the markets in 2021. Ghulam Zia of Knight Frank will join in to tell us his take on Mumbai's residential real estate market, which is soaring. But before all of that, Lata, what did you make of the markets on the last day of 2020?
Well, actually, there wasn't much to say, simply because there were not too many markets trading. So it was actually thin trading, and yet it was choppy all the while for 2 reasons. One, whenever you reach these big figures like 14,000, you know, there is a bit of dilly-dallying. So like yesterday, yesterday also we thought we would hit 14,000. But at that point, there are a lot of algo trades which, trigger selling. Today as well, we crossed 14,000 3-4 times during the day, but ended kind of at the lowest point of the day, pretty much where we ended yesterday. So, after all the volatility, we didn't put on much today, so to speak. So it was a nothing kind of day in terms of market gains as far as the index is concerned. But it's important to note that probably because it was the last trading day, people sided with the strong boys. So it was the HDFC, usual on an F&O expiry day, when a heavy contract expires especially. So, it was Infosys, Asian Paints, and especially HDFC, which kind of was the anchor for the market. But mid-caps did better. And among mid-caps, it was the realty stocks which were the spark. Actually, I'm playing your role and talking about stocks and sectors because I don't want you to talk about stocks and sectors for the day. Why don't you tell us what happened in 2020? What were the key takeaways for you?
You know, yesterday you said that you will thump the table and say Nifty will do 14,000, and it did. Well, the 2020 as a year was a table-thumping moment for the bulls, because the Nifty ended this year, for whatever it's worth, for all our ups and downs, ended 15% higher, and that's actually a 3 percentage point higher than what we saw in 2019. In the last 5 years, this is the second best performance that we've seen on the frontline index. The Nifty Bank, however, was underperforming with a cut of almost 3%, and the this was clearly the year of mid caps and small caps, both those indices putting on 22% in terms of gains. In terms of sectors, it was the pharmaceutical as well as the IT sector that stood out. 60% gains for the pharmaceutical sector, 55% for the IT sector. And if you take a look at the top Nifty gainers this year, Lata, of the top 8, 6 would belong to IT as well as pharma. The latest entrant on the Nifty, Divi's Lab, up 107%, would have doubled your money. Dr. Reddy's, Infosys, a big boy like Infosys, rising 70%. HCL Tech up 65% as well. And from the other gainers, the most notable one was Reliance, primarily because of the weight that it lent to the up move on the index. From 7,000 to 11,000, Reliance was the single largest contributor on the Nifty. Some underperformance and still ends the year higher by 34%. Among the losers, it was either the PSU pack or the financials. IndusInd Bank was down 41%, Coal India down 36%, State Bank of India not doing too well as well, notwithstanding the rally that we saw in the last quarter of this year. It was down 18%. But the biggest gains were reserved for the mid caps. Granules would have tripled your money this year, and these are only 5 mid caps that have doubled your money. 60, 70, 80%. There are abundant names in that. Aurobindo Pharma, for instance, would have doubled your money as well. And the common theme among mid cap losers are all PSU banks. PNB, Union Bank, Can Bank, or Bank of Baroda would have halved your money, at least from the start of this year. And then came the big movers who were actually small at the start of this year. Something like a Tanla Platforms. I'm not even talking about the unknown names or the relatively less spoken of names like Alok Industries, etc., which was up 640%. Tanla would have made you a 10-bagger this year. Adani Green, not heard about much before 2019, wasn't even in existence that time, up 6 times this year. Laurus Lab, Aarti Drugs up 4 times. CG Power saw a change of ownership, up 4 times this year. We had Birla Soft, India Mart, a lot of people booked online or did business online. And finally, we had the PLI theme, manufacturing theme, Dixon Tech up 260% this year.
Yep. Oh yes, this really is eye-popping. But when you come right down to it, it was a year when people peddled for safety.
Right.
So what did well? IT, pharma, FMCG.
That's
if
correct.
you look at it sectorally speaking, though I take your point that mid-caps showed you that if you were courageous and intelligent and diligent, then you could pick...
And lucky.
And lucky. Absolutely. All right. But it's not for us to tell you that opinion. Let's get it from the experts. Gautam Shah of Goldilocks Premium Research. He tracks the charts very closely, and he told us he sees more upside in the market and gave us a huge magical figure of, 15,000 for the Nifty sometime in 2021. Listen.
This market still has a lot more upside. All we are looking at is a possible speed breaker or a shakeout in the month of January before we go on to test much higher levels. You don't fight trends. We saw that in 2007. Strong can get stronger and stronger to the point of disbelief. So working with 13,600 as a sort of a trailing stop loss, for leverage positions. Well, I think a number of sectors in the market have played catch up in the last couple of months. Let's not forget the Bank Nifty is still an underperformer despite the stellar rally that it's seen in the last 6 weeks. Let's also not forget that in the period of April to September, Bank Nifty was a laggard. And like many other sectors in the market, even it got into V-shaped recovery mode. And our working target is very close by in the form of 31,600. And eventually we could see 32,600, which was the February-March highs.
And with that, let's go to the second headline, staying with the year-ender theme. It's the first time in 7 years that HDFC Bank, the gold standard in banking, underperformed the Nifty in terms of returns. Abhishek Kothari is here with the details.
For the first time in last 7 years, HDFC Bank has given a lower return than Nifty. So HDFC Bank has ended up giving a return of close to 12.7% versus 14.9% return that investors got on Nifty. So in 2013, remember that HDFC Bank gave a negative return of 2.7% when compared to positive return of close to 6% for Nifty. Here are the charts trends, showing HDFC's return versus Nifty over the last 7-8 years. Now, in 2020, Bank Nifty gave a negative return of 2.7%. Only Kotak Mahindra Bank outperformed Nifty and Bank Nifty in terms of returns to shareholders in 2020. However, ICICI Bank, Axis Bank and SBI gave a negative return in 2020. Back to you.
All right, take that point. Interesting one. Abhishek, HDFC Bank conspicuous by its absence in the top gainers on the Nifty, a first in the last 7 years. That's also the reason why the Nifty Bank underperformed this year. It underperformed the Nifty by almost 18%. But with that, we move on to the third headline for the day. Reliance Jio announces free voice calls to any network in India from the 1st of January 2021. That is tomorrow, as interconnect usage charge regime comes to an end. Rima Tendulkar gets us more. Rima.
Thanks so much for that. Yes, RUC or interconnect usage charge will be brought down to zero from 1st Jan 2021. What is RUC? It's a cost paid by one telecom operator to another telecom operator when its customer makes an outgoing call to another network. This is also what's called as an off-net call. Earlier, RUC was charged at 6 paise per minute. It's now going to be brought down to zero at the start of the new year. Now, Jio was charging its customers for voice calls made to another network. It was charging 6 paise per minute. But now that the regulation itself is changed to zero, RUC being brought down to zero, Reliance Jio has also said that all off-net domestic voice calls will be free. Now, let's talk about the implication. One, this move was expected because the TRAI had long back indicated that TRAI will be brought down to zero. Secondly, we do not expect a significant impact on the PNLs of any of the telcos. Now, remember, none of the telcos officially disclose if they are beneficiaries or its RUC is a net charge for them or even what the quantum is. So this is only what we can surmise, or we can make some educated guess after speaking to a few market men. But the understanding from that is for Vodafone Idea, considering that it's been losing market share, RUC getting abolished should be a marginal positive. For Reliance Industries, Reliance Jio, it should be a marginal negative. But another way to look at it is its prepaid packs its packs will become cheaper because it no longer will be charging for the voice calls, and therefore its packs or its offers become more competitive. For Bharti Airtel, it's largely expected to be neutral, but as I said, it's unlikely to have a significant PNL impact on any of the telecom operators. Back to you.
Okay, thank you very much for that, Rima, for explaining that. So net there, not much of an impact. That's the key takeaway. With that, we go to a CNBC TV18 exclusive. We learned that the government's Empowered Committee is set to consider measures to ease the difficulties being faced by mobile companies under the new PLI scheme, the Production Linked Incentive Scheme. Ashmit Kumar broke that story for us and he's here with the details. Ashmit, companies seeking more time?
Well, there could be some relief in sight for mobile manufacturers. Keep in mind that they were quite excited when the PLI scheme was announced. However, since then, there has been significant difficulties on various grounds, which they've cited in a letter to the Ministry of Electronics, where they say that it will be difficult to meet the production targets for the first fiscal year, that's FY21, under the PLI scheme. They pointed out that there are supply-side constraints, there are issues concerning the pandemic, there are issues in terms of operationalizing investments, bringing various facilities which were in fact constructed, bringing them back online. That has been a core concern. And on account of all of this, what they have said is that there will be a shortfall in meeting those production targets, and that as a result, the shortfall should be rolled over to the next couple of fiscal years. That's either FY22 or FY23. What we're exclusively picking up from sources is that the Empowered Committee, which consists of the MeitY Secretary, Revenue Secretary, Expenditure Secretary, Niti Aayog CEO, DG of DGFT, all of them will be meeting as a part of the Empowered Committee, which the mobile manufacturers believe is empowered, has the necessary authority to make this executive action. And towards that end, we understand that the meeting of this EC is expected to happen in the month of January. They've taken note of the concerns that have been red flagged by the mobile manufacturing industry. We'll be meeting shortly and will hopefully decide by the end of January on whether or not such an action or such a relief is actionable, and whether or not it is warranted, and whether or not it can be done. So a key relief, the EC, the Empowered Committee, taking a note of the concerns, and will be meeting shortly and deciding on these core concerns going forward shortly in the month of January. Back to you.
Ashman, thanks a lot for that. With that, we talk about walk hard, move away from the mobile space to the pharmaceutical space. That one was in focus, as the company said it will be filling the vials of the Oxford AstraZeneca vaccine and packaging it for the UK government. We spoke with Habil Khurakiwala, who told CNBC TV18 that nearly 2 to 3 million doses are currently being tested before release, and the company is in discussion with vaccine developers globally. Now, the stock ended mildly in the red, but that is no problem, because if you take a longer term chart or a longer term horizon, then you would know that most of it was perhaps in the price, because we've seen a big move on Wockhardt itself. So let's listen in to Habil Korakiwala.
We are indeed very happy that we have initiated the manufacturing of Oxford AstraZeneca vaccine in our manufacturing facility. And we believe that about 2 to 3 million doses is already manufactured. It is waiting for testing. And once the testing is done, it will be released. We believe that a total of about 90 to 100 million doses government has contracted us to manufacture. We have already started and manufactured about 2.5 to 3 million vaccines, which is awaiting a quality control check. And once it is done by AstraZeneca, it will be released. We are in discussion with the global developer of vaccine who have developed their R&D, and we are in discussion with them. And our approach to most of them is that we will also manufacture vaccine here in India along with fill finish. So we will do a complete comprehensive role of that. And there are two options we are already in discussion. One is that we work like a CMO, we manufacture and supply to them. The second option, simultaneously, we are exploring, we will be distributing those products in India and some other markets.
Okay, so that's the bunch of important corporate news, but we are not done. There are lots more corporate news and trends that we picked up from the street today. All those stories coming up for you in just a minute after this break.
Welcome back. You're still with us on Markets Today. We told you the first couple of headlines of the day. Here's the rest. The fourth one, real estate stocks. They clearly were the flavor of the day. Shined in trade as Mumbai saw record registration of home sales. Nearly 19,000 homes were sold in December or registered in December, according to property consultancy Knight Frank. In fact, total house registrations for the year of 2020, as per them, may touch 65,000, which is only marginally behind 67,000 last year. What does this mean for the listed stocks and the companies? Sonal Bhutra joins us with more. Sonal.
So real estate registrations have also kicked off, and this time around in December it has been record registrations. In fact, it is an increase of 103% on a month-on-month basis, and this has happened because of the stamp duty cut that we saw back in September. So let me start with what Antique is saying. Antique goes on to say that housing sales in Mumbai has witnessed outstanding growth in Q3. Housing registrations are up 193% on a YOY basis as well, and on a sequential basis it is up around 103%. Morgan Stanley says that overall Q3 data is quite promising. There has been a gradual recovery. Q3 is better than Q2, and they expect this trend to continue. They go on to say that now market share is moving from the unorganized space to the organized space, and both the affordable and mid-income housing is performing much better than luxury segment. And not only for the residential market, they're also saying that commercial rentals are at that 95% levels, which is almost equal to pre-COVID levels. So that is also quite positive. In fact, Knight Frank came with a report today where they said that between September 1st to December 30th, Mumbai recorded registrations of 41,681 units, and in 2019 it was around that 65,000 mark. So majority of the registrations have come in last 4 months, and the reduction in stamp duty is the reason for that, and whether it continues or not is something that we'll have to see, because from tomorrow the reduction in stamp duty comes down to 2%. So let's see how it pans out, but for this month itself it has been a record sales for the Mumbai real estate business.
Okay, thanks for that, Sonal. And actually, Sonal is alluding to that Knight Frank report. We got the executive director of the company and the author of the report, Ghulam Zia, and that's what he had to say.
If I go by only the IGR data, last year the registrations of homes in Mumbai region were about 67,000 units. And this year, as we are closing the year, we are already doing about 64,000+ units. So which means that last month, and since your focus is last quarter and last month, ever since the stamp duty cuts were declared, The raise in the registration has been absolutely stupendous. It's fabulous. We could never expect such kind of sales. And that is the number that you're talking about. If I could talk about almost about 19,000 units in the month of December alone, that is something which is taking the annual number in perspective.
Okay. So Mumbai real estate has something to cheer. We now come to the fifth headline, and this is something which all of Mumbai and India will cheer. Jubilant Foodworks, the stock surged after the company announced it will invest 92 crore rupees in BBQ Nation Hospitality. Again, another quick service restaurant company. They're going to buy 10.76% stake in the company for that 92 crore rupees. Jubilant stock closed 4% higher. Mangalam, well, you cover quick service restaurants, both stocks and the business. So what do you make of this?
Well, the first thing is that BBQ Nation IPO is slated for 2021, so this could be a pre-IPO placement for that. So in that regard, more than customers, I think the shareholders of Jubilant Foodworks will enjoy if the stock lists at a much bigger premium than what they've invested it at. 92 crores for 10.76% implies the valuation of the company at around 855 odd crores. But a little about BBQ Nation, it owns and operates 138 restaurants in India, a few abroad as well. A lot of people may have, visited the restaurant. What it actually tells you is, it's been growing really fast. 740 crores were the revenue in FY19. FY20, of course, was a lost year for all the restaurants, but it grew from 500 crores in FY17 to around 750 crores in FY19. So the track record is good. But for Jubilant Foodworks shareholders, the biggest thing is that, they've been doing a lot of recent pivots. The first one was, of course, when they moved beyond just pizza, got into Dunkin' Donuts a couple of years ago. But in the last 18 months, they entered the Chinese food via opening Hong's Kitchen in Gurgaon. Thereafter, a very fast-growing market was the ready-to-cook sauces. So they started that under brand Chef Boss. And the most recent one was the entry that they did in biryani via Ekdum Biryani. And there is a fair amount of thought because BBQ Nation is extremely popular. Chinese food is the most popular foreign cuisine in India. Ready-to-cook sauces growing really fast, and biryani is the most ordered dish. So it, dare I say, people will look at it as a platform now than just a pizza maker.
Okay. Well, let's see how it works out. We also tried to get some expert investor opinion, and Saurabh Mukherjee of Marcellus Investment Managers held forth on this. Listen in.
Jubilant Foodworks has had most years it struggled to grow earnings in double digits. They've struggled with the range of products. They had a bumper run between 2009 to I think 2014. Then they sort of they meandered here and there. But I failed to see the competitive advantages, the barriers to entry, and hence I'm always a little perplexed when I see companies like Jubilant Foodworks trading at the giddy valuations that they do.
Well, frankly, at the moment, I don't give a damn about valuations. I do give a damn about Jubilant Foodworks, what they sell, and BBQ Nation. Hope all of you have a great New Year's Day or a New Year's Eve bash. Mangalam, I guess you're prepared for your own party.
I am prepared for my own party, but we have a glass of water in our hands. So just say cheers to all our viewers. Very happy 2021. May it be much, much better than 2020.
Let's leave you with some of the images of 2020. Stock market images, obviously.